Once this deal is done, we'll be in 11 time zones. Who do we have handling this?
BDO.
And over there?
BDO.
People who know BDO.
Hi, everybody. Welcome to On the Money. I'm Maria Bartiromo. The market soared to new heights, a surprisingly strong jobs report. But are things as good as they seem? What's next for your money? I'll talk to bond king Bill Gross and former Obama economic advisor Austin Goolsbee. Plus, searching for the latest gadgets from Google, the vision from a global leader in technology.
They are pretty cool, a little geeky for me.
And it's everybody's favorite time of the year, tax season. Last-minute tips from the experts that could save you money. On the Money begins right now.
This is America's #1 financial news program, On the Money. Now, Maria Bartiromo.
Here's a look at what's making news as we head into a new week on the money. A surprisingly strong jobs report for the month of February. The Labor Department reporting that employers added 236,000 new jobs for the month, well above expectations that pushed the unemployment rate down to 7.7%. That's the best number since December of 2008 and the most jobs added in more than a year. Manufacturing and the services sector both showed strong growth in jobs. It was a record week on Wall Street. The Dow Industrials reaching an all-time high on Tuesday and then rising throughout the week, each day setting all-time highs. The markets have strong tailwinds of low interest rates from the Federal Reserve and a lack of bad news from Washington driving them, along with strong earnings. Former General Electric Chairman and CEO Jack Welch told me the economy can take off if regulators get out of the way.
This economy is sitting here like this. Buoyed from underneath is the Fed, with all this QE3. Pressing down from the top are an incredible array of new regulations and pressures. So you got these two forces working against each other. If we can ever get a break on the reg side, this economy is ready to really go.
The Federal Reserve released the results of the bank stress tests this week, and 17 of the 18 major banks had adequate capital reserves in case of dire economic conditions. The only one that did not was Ally Bank. The Fed simulated conditions of a severe recession, which included an unemployment rate of 12% and the U.S. economy shrinking by 5%. BlackRock's Larry Fink told me America's banks are in great shape.
Our banks are the best capitalized institutions in the world. The problem for the banks going forward is not capital. The problem for banks going forward is making sure they originate enough loans.
And Facebook is waiting to find out if users will like the new version of its news feed. CEO Mark Zuckerberg introducing the changes this week. He described it as a personalized newspaper that is more visual and allows users to choose a topic in which they're interested. The images and links to articles are bigger, which should make them easier to use on small mobile screens. A monster week for the markets as the Dow sets new records. Key data on the economy with a strong jobs report. What does it mean for your money? Joining me right now to talk about it, Bill Gross, PIMCO founder and co-chief investment officer, along with Austin Goolsbee, professor at the University of Chicago Booth School of Business and former chairman of the Council of Economic Advisors for President Obama. Gentlemen, good to have you on the program. Thanks for joining us.
Thank you, Maria. Nice to be here.
Austin, great day to talk to you. Let's start with the jobs number released on Friday. A very strong number, 236,000 new jobs created for the month. The unemployment rate now the lowest in 4 years. Was this what you expected, and what do you think it says about where we are in the economy?
Well, it was better than I expected. This is one of the reports. We've been waiting for reports like this. You never want to make too much out of any one month, as you know, we always say. If you could put several months like this together, I think people would be feeling a lot better on what the implication is for GDP growth. I wouldn't get hopes up too much for that, though, because I think the sequester kicking in is going to slow growth a bit, so the future months might not be as strong as this one.
Certainly optimistic, though, nonetheless. Bill, the stock market keeps on hitting record highs, but the phrase that you're using in your latest newsletter is rational temperance. You say investors should expect lower returns. Why, and what do you mean by that?
Well, I think they should, Maria, and it's obvious in the bond market. When a 5-year Treasury only yields 90 basis points, it's obvious that 5 years from now, that's what you're going to get. You know, it's harder in the stock market because you have earnings expectations and PE ratios. But, you know, in stocks, to explain what's going on in the past few weeks, you know, stocks have experienced an exuberance in terms of dividend payments, moving from, you know, an annualized $270 billion to an expected $300 billion now. They've also initiated, you know, a lot of buybacks in terms of record numbers, $117 billion in terms of announced buybacks. So cash flow is moving in to the stock market. There is exuberance, perhaps a little irrational, but nonetheless, it's real.
Yeah, it's true. I mean, those buybacks, is that a positive for the stock market, Bill?
Oh, I think very much so. To the extent that corporations are bullish on their own stock, $117 billion is a decent infusion into the market in terms of buying power. You know, the $300 billion in terms of dividends is important as well. Exxon, Apple, you know, other companies like AT&T are expending perhaps $10 billion a year in terms of dividends, and so they're increasing by 10-15% a year. Investors like that.
Yeah, I want to ask you about the fundamentals of this economy, though, Bill. But in a moment, Austin, let me turn to politics for a moment, because we saw President Obama meet with Republicans several times during the week. The House, of course, passing the continuing resolution to fund government spending. Is there a new era in D.C. with both sides actually talking to each other, or is there any chance of a grand bargain? Should we read into this?
Well, I don't know about that part about the grand bargain. It does seem like they're getting along better. They're having breakfast with each other. They had a dinner together. I still fundamentally think, though, that the American voter is very conflicted about entitlement cuts, increases in taxes, or other cuts to government spending. You probably saw the recent survey where they went through 20 categories of government spending, and there wasn't a single category that that a majority of voters say, yes, we ought to reduce spending in that area. So I think as long as the voters are conflicted in their own minds, they're going to have dinners and breakfasts together. They might get along a little better, but I think the grand bargains will be hard to get.
But of course, Austin, the sequester kicked in this week. The world did not end. Did the president exaggerate the consequences of these mandatory spending cuts?
I don't know. I don't think so. From what I saw, the president was highlighting a bunch of specific cases where he thought it would harm things. I do think this was nowhere near as big a negative as the fiscal cliff would have been. I see this as cutting maybe half a point, 0.6 of a point off the growth rate, which is enough to make the jobs numbers more sour than the one we saw on Friday. And people will, again, you know, maybe by the summer start saying, well, why isn't the recovery faster? What's going wrong with it?
So, Bill, what about these markets? Do you think the rally in stocks is based on fundamentals? Is it all that easy money from the Federal Reserve, the fact that there just are very few alternatives for people's money? What is this based on?
I think all of that, and I think we should be cautious. You know, all markets, as you just pointed out, are moving based on central bank check writing. The Fed's buying nearly $1 trillion worth of treasuries and mortgages a year. The Bank of Japan, you know, threatens to write trillions in yen beginning in April, and the Bank of England is going to join in the party. And so all of this fuels buying of equities because of the anticipated increases in inflation and the trillions of dollars of credit that's being created. The critical question going forward is, can central banks generate higher real growth with these policies as opposed to simply writing checks?
Mm-hmm. So if we need to lower expectations, as you say, what should investors do right now? Where do you want to be allocating capital, Bill?
I think they want to allocate capital in the U.S. bond market to inflation-protected securities, to, you know, short maturity, high-yield bonds, 2- and 3-year pieces of paper. I think they should go outside the United States as well. There are economies in Mexico, in Brazil. You know, they're dynamic relative to most developed economies, and with balance sheets that are very attractive. So, you know, look outside the United States in addition to inside the United States for growth, especially in the equity side.
Gentlemen, good to talk with you. Thank you so much.
Thank you, Maria.
Great to see you again.
We'll see you soon. Bill Gross and Austin Goolsbee joining us. Up next, we are on the money. Would you Google on the go? The tech giant is testing new glasses that make the power of search more mobile than ever. I'll go through the looking glass with the man in charge of making Google profitable. Chief Business Officer Nikesh Arora will join me. Later, it's that time of the year. Tax season is approaching. The advice you'll need to file your returns and save money before April 15th. As we take a break, take a look at how the stock market ended the week. Back in a moment. Well, some 2 billion internet searches occur around the world every day. The lion's share on Google. The technology leader stock up about 30% year to date, and it is the most owned stock in the 50 largest mutual funds in the United States, more so than Apple. I spoke to the man in charge of how the company makes money, Chief Business Officer Nikesh Arora, about what sets Google apart.
People's expectations from search are way more than what they used to have in the past about just getting, you do a search, you get 10 blue links and you click and you go to a website. Today, when people search, they do that on their mobile phones, they do that on their tablets, they do that on their PCs. They expect a lot more precise information. They actually, if they type somebody's name, they want to know all about that person. They type the name of a restaurant, they want a map, they want to know how to get there. Whether it's in their phone, they literally want directions to get there.
Down to the most specific things. We've talked over the years about how I could be walking and because the chip in my phone, you know where I am, and you could send me an email and say, I know you like, this kind of food. Well, there's that kind of restaurant around the block from where you are right now.
Exactly. I mean, part of what is fascinating is I've been using my Android device, as I always do, and I land in a new city. I have a meeting. It's in my calendar. It's my phone. My phone's telling me, you should leave for a meeting now because there's traffic in the way. So your phone has begun to understand different information aspects about you. Your calendar knows about my email, knows about what I like, and is beginning to suggest things to me.
Let me ask you about the stock price, and I know you don't watch the stock price, but this week the stock saw a new high, amazing run. What's behind the momentum? What can you tell us in terms of what's driving the strength and power at Google?
Well, Maria, as you know, I used to do this for a living before, and I've been a huge fan of the show, watching you talk to so many people. I have heard so many really, really smart people who must have a way better view about the stock market and stock price than I can have.
But you know about what's driving the business. What is it? What are you most excited about?
Well, I hope it's the success of our business. I hope it's the belief that investors have in the fact that, we are not a one-trick pony. We are a company that is executing on multiple fronts, whether it's search, whether it's advertising, whether it's YouTube, Android, Chrome, you name it, Motorola, all the different things that we've undertaken over the last many years.
Making money in advertising, particularly through mobility, has been obviously key for the business outlook. A lot of technology executives struggling with the balance of intrusion of advertising into the seamlessness of consumers' mobile experience. Can you do it? Has the space changed in terms of making this balance?
Whether it's in television, whether it's in newspapers, whether it's in radio, content has been monetized primarily either through advertising or through some form of subscription or through some form of pay-as-you-go or some form of sort of transaction. And I think that's how it's going to get monetized in the future. And to be fair, us as consumers know that. I mean, you and I know that content is not free. And there's one very interesting innovation we've done on YouTube. We have an advertising format called TrueView. So normally when I watch television, I have to watch the ad. On YouTube, when you see the ad, you can skip it. You don't have to watch it. So advertisers only pay for it if users are watching it. Users only have to watch it if they want to watch it. So that's sort of part of what we're trying to do, is to make sure that it's not intrusive, it's not in your face.
Let me ask you about some of the products that you're coming out with. The Google Glasses. Do you wear these Google Glasses?
I have worn them. They are pretty cool. A little geeky for me, but it takes getting used to. But I think I like the idea of having a camera mounted sort of above my eyebrow, having the ability to see a screen over there, see my email, see my messages, see results to Google searches. And I think what's interesting is it's a whole different way of visualizing computing. And I think many interesting applications will be created over time. And I can imagine a surgeon having the watch and doing an operation and somebody else from the other side watching it with him and talking to him through it or helping him. It'd go down well in countries like India where you can't have the experts be in every village that you want. And that could be an interesting application. So,
actually, that's a great analogy, the surgeon.
Yeah, it's like you can see the world from the eyes of the person wearing it, and that's very different than you and me taking a picture of something.
I love it. How do you see technology and how it's changed? I mean, here you have a lot of expectation that the PC is dead. It's all about mobility. How do you see technology today and what's shaping it?
I think what's fascinating is if you think about the evolution of technology, what has happened is there was a wave when technology was created for enterprises. You know, the first time I ever touched a PC was when I went to work, or first time I had a laptop when I had it at work. If you look at what's happening now, technology is being created for end consumers first, enterprises second. Another thing which is interesting is technology has been created sort of in point solutions. You have a tablet which runs an operating system, has an app ecosystem. You have a desktop which works with the internet and has a different operating system. You have a phone which might have a third one. And I think what's fascinating is we're going to keep seeing a divergence of screens, yet we will see a convergence of services. So I'll listen to music across multiple screens, but I'll do it sort of in a seamless way, so I don't have to keep signing in or dialing in to different services across these screens. I think that's going to be a fascinating change, a fascinating revolution coming up in the next few years.
Nikesh, good to have you on the program.
Thank you, Maria.
Thank you so much. Nikesh Arora joining us, Chief Business Officer at Google. Up next, we are on the money, how tax law changes can impact your bottom line, what you need to know as April 15th draws near. And you can find us on Facebook/Maria Bartiromo. Back in a moment. Well, it is that time of the year again. Tax day approaches. How to be sure you're getting the most out of your return. Ernst & Young tax partner Greg Rossica joins me now with some advice on changes in tax law that may impact your returns this year. Greg, good to have you on the program. Thanks for your time today.
Thanks, Maria. Glad to be here.
So let's talk about the new changes that we all need to be aware of. Tax law changes so quickly. There was a lot of discussion at the end of last year about all of this. What do we need to know about any changes or misunderstandings as we prepare to file for 2012?
Sure, lots of changes happened, and you know, always think about what kind of life change you have, because any kind of life change generally is a tax change, means some kind of tax change. So that can help you start to inventory that. But some of the changes we had are retroactive, so they didn't really exist through 2012. They had expired, but then they came back in on January 1st of 2013 with some late legislation. So things like the alternative minimum tax exemption, that was permanently put back in place. It's higher. That means for everyone, less people are subject to the alternative minimum tax. Also, other items like deductions for teachers. So teachers that spend items like $250 on expenses for their classrooms, those are deductible, and they're deductible above the line, which is always good. We like those better.
Absolutely. So look ahead. How is what we're experiencing now, how can that impact filing 2013's returns?
So filing for 2013, those are things you want to know about. You want to try to minimize errors, find deductions that you might be overlooking, and just be able to expect what this impact is going to be on your tax return and ultimately maybe your refund that you'll be getting.
Are there common deductions that you think people overlook?
There's deductions that people don't always focus on that they should think about. Sometimes very simple things like charitable contributions. You may have spent some money on behalf of a charity, bought some things for a charity, or maybe you just used your car to deliver holiday meals or to drive to charitable meetings that you go to. You can actually deduct mileage expenses for those kind of things.
Now that's interesting. So Ernst & Young keeps a list of 25 errors that tax filers regularly make. Number one is check your math. Tell me some other common mistakes.
Yeah, certainly that's a very simple one, but also making sure you have the right Social Security number on there. And if you take dependent exemptions, things like kids or maybe relatives, you have those on there as well. But go back and look at last year's tax return first, right? It's all chock full of all kinds of good information. You might have carryovers from prior losses you had on stock sales that can come forward to this year. Also, it's a great reminder to see what things you had in prior years you should have this year. Also, look at things like errors that people might make. Nobody likes to admit if they lost any money gambling, but actually you can deduct gambling losses up to your winnings. So you don't have to admit that maybe you lost more than you won, but up to that amount you can take a deduction for as well.
That's funny. So are we all paying more taxes this year because of the elimination of the payroll tax holiday? So perhaps we're paying less last year?
Right. Well, you'll pay less this year, meaning 2013. But for those people that are filing their tax returns for 2012, that was still in place, and they got that. But here's a caution: people that get large refunds, in doing that. You know, they must like earning 0% because that's what they're getting, right? They're loaning the government money for 0% if they get big refunds. So think about that, whether you should maybe increase your W-4 exemptions, the number you reported on that form, maybe when you first started your job. That's driving a lot of what's withheld and why you might be getting a refund. But be cautious, because that payroll holiday that we had in 2012 is gone for 2013. So everybody that earns a wage from the first dollar up to about $110,000 of income is paying an extra 2% for 2013. So your refund won't be as big for 2013, most likely.
All right, we'll leave it there. Greg, great advice as always. Thanks so much.
Hey, my pleasure. Thanks, Maria.
Greg Rossica joining us. Up next, a look at the news this upcoming week that will have an impact on the money. And then searching for the richest people in the world, what the youngest billionaires have in common. Seems they got by with a little help from their friends. Back in a moment. For more on our show and our guests, check out the website, otm.cnbc.com. And I hope you'll follow me on Twitter and on Google+. Look for @Maria Bartiromo. First, though, look at the stories coming up in the week ahead that may move the markets and impact your money this week. Tuesday, say goodbye to supersize. New York's limit on the sale of sugary beverages over 16 ounces will go into effect. Also, Representative Paul Ryan expected to release the latest version of his budget proposal. That's happening on Tuesday as well. On Wednesday, we get a total number for the retail sales for the last month. And then on Thursday, the Producer Price Index will indicate whether or not there is price inflation at the wholesale level. That's followed by the Consumer Price Index, which comes out on Friday. Finally today, Forbes' annual ranking of the world's richest came out this week. Among the usual suspects like Bill Gates and Mexican mogul Carlos Slim, there are 29 billionaires under the age of 40 on that list. 4 of those earned the fortune from Facebook. The youngest, richest people in the world are 28-year-old former roommates Mark Zuckerberg and Dustin Moskovitz, worth over $13 and $3 billion respectively. Also in this Billionaires Boys Club, co-founder Eduardo Saverin and former president and Napster founder Sean Parker. Nice work if you can get it. That's the show for today. Thank you so much for joining me. My guest next week, Mary Robinson, the first woman to serve as president of Ireland. Each week, keep it right here where we are on The Money. Have a great week, everybody. I'll see you again next weekend.